Good evening, boys and girls. So, how are you? How is your preparation going? So, students, till now we have done 8 chapters of this subject, that is auditing and ethics. Today we shall be gaining an overview of chapter number 9, that is special features of audits of different types of entities. So, students, past chapters which you have done, these were based on standards on auditing, on some particular essays, or some chapter was based upon mixture of certain essays. Like in chapter 3, we had read about essay 315, essay 330. In chapter 4, we had read about essay 500, essay 501, essay 510, essay 550, essay 530. But this chapter, chapter number 9, special features of audits of different types of entities, is not based upon a particular standard on auditing or a mixture of standards on auditing. Rather, this chapter is about special features in different type of organizations, in different type of entities, which are peculiar to them. So audit procedures remain the same, students. Remember, audit procedures remain the same. But in this chapter, you would be learning about some special points, about some special considerations, which have to be kept in mind while conducting audit in these areas. Okay. So, you have till now not read anything about government audit. About CAG, about Comptroller and Auditor General of India. You haven't read. Similarly, you haven't read anything about audit of municipal corporations. Okay, similarly, there are other types of organizations like NGOs, like say hotels, like clubs, like partnership firms, which may be engaged in manufacturing and trading activities. So some special points have to be taken into account while conducting audit of such type of entities, like in case of cooperative societies, like in case of hire purchase and leasing companies. So we shall be quickly gaining an overview of these special features. So as I am repeating, students, remember that audit procedures, what you have read till now, these remain the same. So only thing is that we have to keep in mind certain distinctive features of entities, of organizations which are engaged in some special kind of activities. Okay. So first of all, students, government audit. Yes, guys, tell me why government audit is important. Yes, anyone? What do we broadly mean by government audit? Yes, anyone? Yes, Sumit, Sushil, Malappa. So why government audit is important? What is the significance of it? So students, governments, you know, have a huge amount of budget these days, because they collect money from citizens of a country, and they spend that money for running the administration of the country. So like in India, we have a huge budget, okay, where government receives money by way of direct tax collections, by way of indirect tax collections, like GST, like customs duty, like excise duties, and government spends these amounts not only for running administration of the country, but it also spends these amount for the welfare of people, for executing various schemes, for executing various projects. So like uh, you know that many infrastructure projects are going in the country. Roads are being built, highways are being built, ports are being built, bridges are being built, and many welfare programs are also undertaken. Say Ministry of Health is undertaking some welfare program, or or some another ministry is undertaking some sort of program for the welfare of marginalized sections of the society, for the welfare of downtrodden and poor people. So therefore, there is a necessity to audit revenues and expenditures of the government. So remember, students, there is a necessity to audit receipts and expenditure of the government. So to put it simply, it means that whatever amount needed to be collected from the citizens of the country by way of taxes, by way of duties, whether it has been collected or not in accordance with laws, rules, and regulations, and whether that amount is spent in accordance with laws, regulations, in accordance with orders, whether it is in conformity with the sanctions. So students, there is a constitutional authority, there is a constitutional office which is responsible for all this. Now this office is known as Comptroller and Auditor General of India. Comptroller and Auditor General of India. Now take care, students, while writing the word is comptroller, C-O-M-P. It is not controller. So sometimes students, while writing, they wrongly write the name. Okay, so be careful about the spellings. The word is Comptroller and Auditor General of India. Now it is a constitutional authority, and provisions regarding the Comptroller and Auditor General of India are contained in Constitution of India itself. Okay, so Article 148 to 151. Article 148 to Article 151 of the Constitution of India deal with Comptroller and Auditor General of India. Okay, so these provisions are contained in part 5, chapter 5 of Constitution of India. So Article 148 basically it states that once a Comptroller and Auditor General of India is appointed, he can't be removed except by the process which is followed in case of removal of a Supreme Court judge. So how is a Supreme Court judge removed? How can a Supreme Court judge be removed? He can be removed only by means of a motion being passed in the parliament by 2/3 majority of members present and voting on account of proven misbehavior or on such grounds. So students, similarly, the relevant enactment provides a fixed tenure for the office of Comptroller and Auditor General of India. So what do these things signify? Yes. What do these things signify? It is provided in the Constitution of India that CAG once appointed can't be removed except following a process which is similar to removal of a Supreme Court judge. And that process is a motion has to be passed in each House of Parliament for his removal on accounts of proven misbehavior. And what does this signify? What does this denote? Yes, Paranjali, Sumit, Sushil. What do these constitutional provisions tend to indicate? Yes, anyone? You can reply on on BOS mail. Yes. Anyone, guys? Yes, it is very simple, students. Aren't you getting my question? What I'm trying to convey? What is the importance of such provisions? No, only Krishnan, you are saying constitutional power to CAG for what? What it is trying to ensure? What these provisions are trying to ensure? Yes, only Krishnan. Yes, come on. No. Sumit, you are saying Parliament is supreme. Okay, that's fine. But but from audit point of view, what these provisions are trying to ensure? Yes. Think logically. It's very simple. Yes, you are right, Unin Krishnan, that they are providing constitutional power to CAG for what? Yes, nobody. So students, such provisions are aimed at ensuring independence of CAG. Have you forgotten about independence? When it is difficult to remove some person and a cumbersome process has to be followed, and it has to be passed in each House of Parliament by a specified number of parliamentarians. So it ensures independence of the office of CAG. Okay, so that is the important thing. And these provisions, Article 148 to 151, these also state that Parliament, by virtue of creating a law, it shall specify the power and duties of CAG. Okay. So, in pursuance to these provisions, by virtue of these provisions, Parliament has passed an act which is called as CAG Duties, Powers and Conditions of Service. Act 1971. So there is a, remember that there is a provision in Constitution that Parliament shall by virtue of a law and prescribe the duties and powers of CAG. And to give effect to that, our Parliament has passed a law which goes by the name of CAG Duties, Powers and Conditions of Services Act 1971. So it provides for a fixed tenure of CAG for a period of 6 years. Okay. Is it clear? And these provisions, Article 150 also state that accounts of union and accounts of the state, in which form these are to be maintained, these shall be prescribed by the President of India on the advice of CAG. Clear, students? So, and these provisions, Article 151 also states that when CAG gives his report, then this report on the accounts of union is to be submitted to the President of India, who shall cause such reports to be laid before each house of Parliament, and that is Lok Sabha and Rajya Sabha. And in respect of accounts of state, these shall be laid before the legislative assemblies. Okay. Clear, students? Is that clear? And there is also one more important provision which states that salary of CAG is not votable, it is chargeable. So it also ensures independence of office of CAG. It is chargeable on Consolidated Fund of India. So what is Consolidated Fund of India? We shall be coming into right now, just after few minutes. So this also ensures CAG's independence. So you have understood, students, the broad outline of what office of CAG does. He is responsible for auditing government revenues and government expenditure, like whatever amount has been expended in different ministries, say in Ministry of Defense, say in Health Ministry, say in Ministry of Coal. So CAG conducts audit of all these things and submits a report. If it is conducting audit of some union ministry, then it shall it shall give its report to the President of India, who shall cause it to be laid before each house of Parliament. And if it is conducting audit of some state program or for some state ministry, then it shall submit the report to the governor of the state, who shall cause it to be laid before the state assembly. Okay, clear, students? So besides this, CAG is also responsible for the audit of corporations which are substantially or wholly financed by the government money. And as you have read in your company law, that auditors of government companies where government has a majority stake, where union government or union plus state government or state governments have majority stake, their auditors are auditors of financial statements. Statutory auditors are also appointed by CAG, and CAG has also power to give directions to the statutory auditors, and based upon their report they can also conduct supplementary audit or test audit. So these things you have read in your company law. Appointment of auditor of a government company as contained in section 139, and appointment of and reporting of and audit reporting requirements under section 143 in case of government companies. Clear, students? Is that clear? So now, students, we have used the term Consolidated Fund of India. So what do we mean by Consolidated Fund of India? Yes, can anybody tell? What is Consolidated Fund of India? Yes, anyone? Sumit, Paranjali, Sushil, Malappa. What do we understand by Consolidated Fund of India? Of which elements Consolidated Fund of India is made of? Yes, anyone? Yes, guys. No response from you. Have any one of you read Union Budget? Have you seen a copy of Union Budget? It is published in newspapers. It is shown on TV channels. Yes, Malappa, it is a repository for all revenue received by Government of India. Yes, right. Right, Malappa. Yes. Yes, Shambhi, you are also right. Partly right. So whatever amount the government receives by way of taxes, by way of duties, it all goes into Consolidated Fund of India. And it is from this Consolidated Fund of India that different ministries make expenditures. Different ministries make appropriation of demands. Okay. So no, it is not estimated fund, Sushil, you can say. It is not estimated fund. Consolidated means where everything is combined. Consolidated. Okay. So there are provisions in our constitution. There are provisions in Constitution of India, Article 266. So which state that Consolidated Fund of India consists of all revenues received from direct and indirect taxes, all the loans taken by the government, and all the amount of repayment of loans received by the government. Okay. So whatever loans government is receiving, these also form part of Consolidated Fund of India. Okay. So when you see the budget, I will show you Consolidated Fund of India. Say like this is the budget. This is the Consolidated Fund of India. Now this is the revenue account part. So it is contained, it comprises of revenue part and the capital account part. Okay. So in revenue parts, there is tax revenue. Now revenue, these figures in rupees crores. Okay. So like actual for year 22-23. So this much was GST revenue. This much crores. Okay. And this was income tax revenue. 16,34,000 crores. So similarly, this is gross tax revenue and there is other non-tax revenues. So these form part of Consolidated Fund of India. So and its second part is capital account receipts. Okay. So the loans which the government has taken, like government makes market borrowings, securities against small savings. So these also, which we call as public debt. Okay. So these also form part of Consolidated Fund of India. So total Consolidated Fund of India receipts. So these are in crores of rupees. These are receipts. Okay. And there are also disbursements from this fund. Okay. So basically you have to understand that whatever the government earns by way of taxes, by way of non-tax revenues, and whatever loans it takes, these all go into forming Consolidated Fund of India. Okay. And expenditure is made from this Consolidated Fund of India. Clear, students? So students, while conducting expenditure audit of different government departments, the office of CAG has to take into account many aspects. Now remember one more thing, that office of CAG is supported by a complete service which is called as Indian Accounts and Audit Department. Indian Accounts and Audit Department, in which manpower is recruited from civil services exam. It is a group A service, central service. It is a group A service. So there is this whole setup, including Indian Accounts and Audit Department. This comes under the Comptroller and Auditor General of India. Okay. And this office of CAG together with Indian Audit and Accounts Department is commonly called as Supreme Audit Institution of India as per CAG website. So while office of CAG conducts expenditure audit, we have to see that certain standards are followed. So one is audit against rules and orders. So what do we mean by audit against rules and orders? It means that whatever expenditure is incurred, say by a ministry under a particular project, then it is in accordance with the financial rules and regulations. Clear? So as the name suggests, it means that audit against rules and orders, that whatever expenditure a particular ministry has incurred, say some ministry has incurred some expenditure on providing drinking water in some remote areas. Okay, so whether this is in accordance with the financial rules and regulations, so such an audit is called audit against rules and orders. Now, second type of audit is audit of sanctions. Now, whatever expenditure a government department, a ministry is incurring, there should be adequate sanction backing it. And the sanction should be of a competent, proper authority who should be competent to sanction it. Okay, so this is called audit of sanction. So first was audit against rules and orders. Now there is audit of sanctions. So similarly, there is audit against provisions and funds. Now what does this mean? Audit against provisions and funds. It means that whatever sanction is there, there is provision of funds from which expenditure can be incurred. Because unless there is availability, unless there is arrangement for funds from which expenditure can be incurred, so it won't serve any purpose. So that provision of funds has to be authorized by the competent authority. So this is audit against provision of funds. Then there is propriety audit and performance audit. Now, what is propriety audit? Propriety audit means that that some standards of financial propriety are followed. Like whenever you make an expenditure, it is expected that it is not made for a benefit of a particular person. Okay, it is made for the benefit for society, for a section of society at large. Okay. Similarly, the expenditure should not be more than what is demanded, what is reasonable. So such type of canons, such type of standards are called standards of financial propriety. And there is performance audit. Now, what is performance audit? Now, performance audit sees that not only rules and regulations have been followed while incurring expenditure by the concerned ministry, by the concerned department, it also seeks to go into this aspect, that whether the desired outcome, whether the desired objective has been achieved or not. Say for example, a metro rail line was sanctioned, and metro is running, say in some city. So now later on, CAG has audited the CAG has carried out the performance audit of laying down of this metro line, and what are the passengers, and what is the outcome to the citizens as a whole. So so CAG would look into all the aspects. Now whether necessary rules and regulations have been followed, whether this line has been useful um, for the objective for which it was laid, like whether it was able to decongest traffic. So these kind of things. So it is not only concerned with adherence to rules and regulation, it is not only concerned with following of rules and regulation, but it is also concerned with their effectiveness, their efficiency, their economy. Okay, so this is the meaning of performance audit. So as the name suggests, it is about performance. Like government has launched some scheme. Okay, say the government has launched some scheme for financial inclusion. So whether that scheme has been successful in achieving its objectives, it would be definitely seen whether necessary rules and regulations have been complied with. But in performance audit, under performance audit, it would also be seen whether this scheme has been able to achieve its objective for which it was launched. Yes, guys, is this clear to you? Now, students, you have heard about municipal bodies. In whatever city you are living in, you have heard the name of municipal corporation, municipal committee, municipal council. So municipal corporations in India, students, in bigger cities, these are very huge, like BMC in Mumbai. So these local bodies have huge budgets. So what is the main source of revenues of these local bodies? Any intelligent guess? They also receive grants from the government. They also receive grants from the state government. But what is their main source of revenue? From citizens. Yes. Yes, students. Do you pay something to your municipal corporation? And on one account, and on what account you pay? Anyone? Yes. Have you paid some bill on your parents' behalf? Yes, taxes. Which kind of taxes, Paranjali? Sumit, yes, you have written correctly. Property tax. So like property tax, house tax. So whatever properties are there in the city, or whatever land is there, So the municipal corporation levies property tax on it. Okay, if it is a built up property, then they charge tax on the covered area. Okay, so this is the main source of revenue for municipal corporations. So obviously in audit of local bodies, you would be seeing that whether taxes have been collected properly, and in some states local bodies also collect water and sewer charges, and from these taxes and grants which they receive from the state governments, the municipal bodies, they are carrying out public welfare activities like providing sanitation facilities, cleanliness drives, like providing lighting, like providing street lights, like building roads in the city, like repairing roads in the city. So all these type of things they are doing from these funds. Okay, so this is the nature of working of municipal bodies. So from examination point of view, you have to keep in your mind what is this particular body all about, what are its functions. So if you are asked to write audit procedures, you can easily write 3-4 audit procedures. Okay, yes. And Sushil, you are saying you didn't understand the meaning of audit of sanctions. So audit of sanctions means that whatever expenditure is being made, it is sanctioned by a competent authority. So the auditor sees that the expenditure is backed by sanction of a competent authority. If in government departments, if some expenditure is required to be made, then obviously there should be a sanction behind it. Who has authorized that expenditure, and whether that person is competent in accordance with the government rules, whether he is the proper person. Yes, yes, clear guys. So another case is, students, partnership firms. Now partnership firms may be engaged in routine business activities, like they may be engaged in trading of goods, they may be providing services, or they may be engaged in manufacturing activities. Now while auditing a partnership firm, apart from all the other procedures, all the other audit procedures, which is the most basic document which you are required to see, which would tell you, which would inform you about the nature of business, about the name of partners, which is that document? Yes, students. Yes, anyone? Yes, partnership deed. Yes, Sumit, you are right. So while auditing accounts of a partnership firm, partnership deed is the most basic and foremost document. Now it is prepared on a stamp paper. Okay, so different in different states, there may be different stamp duty on partnership deed according to the respective state law. So a partnership deed contains the details of partners, the names of partners who have entered into partnership, what the business they are going to do, what is nature of their business, and what is their profit sharing ratio. This is very important because profits of a partnership firm are going to be divided um, among the partners in their profit sharing ratio. Okay. And any special conditions like whether some salary to be paid to working partners, or whether interest on capital is required to be paid to partners, and what is the rate of interest, whether partners can give loan to the partnership firm, what is the rate of interest. So similar type of things. And in case of partnership firm, the auditor is appointed by partners. Okay, so it, and also remember students that partnership firms in India are governed by Partnership Act 1932, by provisions of Partnership Act 1932. And a partnership firm may be compulsorily required to get its account audited under some other law. Like say there is a partnership firm, and if its turnover exceeds a certain threshold as prescribed in income tax law, then it would have to get its accounts audited under income tax law. Okay, otherwise partners can also voluntarily require that accounts of that audit of accounts would require to be conducted. Okay, so clear students? So always remember that in case of a partnership firm, you have to see the terms and conditions which have been elucidated in the partnership deed. It is the very basic and important document while auditing accounts of a partnership firm, because it may so happen that say constitution of partnership firm has changed during the year. So which partner has retired, which partner has joined, this you can also this you can only verify by going through the document of partnership deed. Yes. And students, you have also read about LLPs, limited liability partnership firms, limited liability partnership, in your company law. Yes, have you read students LLP? Yes. Anyone? Yes, students, tell me whether you have read about LLPs. Can you tell me few advantages of LLP as compared to a partnership firm? Yes. Yes, Sumit. So tell me, what are the advantages of LLP as compared to a partnership firm? Yes, Paranjali, that's fine. Minimum 2 members are required. So I am asking to you a basic question. What are the advantages of LLP? as compared to a partnership firm? Why did the need arise for creating a legal structure under the name of LLP? Yes. Yes, Sumit, separate legal entity. Yes. So it is a separate legal entity. That's true. So whereas in case of partnership firm, the liability of partners is unlimited. It is joint and several. Whereas in case of uh, LLP, the liability is limited, as the name suggests, limited liability partnership. Okay. Yes, Paranjali. Yes, you are right. So if it is not a small LLP, so the condition which you are stating, then it is required to get its account audited mandatorily in accordance with the LLP rules. So what is the basic document to be seen in case of an LLP? Yes. Anyone? Which is the document which governs the relationship between the partners of LLP? Yes. Yes, anyone, students? Come on, students. You have already read about it in your company law. So this is more a sort of repetition here. Yes, Shambhavi, yes, right. So LLP agreement, which governs the relationship among the partners. No, it is not partnership deed, Paranjali. No, it is not partnership deed. It is LLP agreement. It is LLP agreement. And if LLP agreement is not there, then what is by default LLP agreement? Then what are the rights? Then how relationship between partners are determined by default? Where are such relationship prescribed in LLP Act 2008? Yes, anyone? So by default, students, these are prescribed in first schedule to LLP Act 2008. So tell me one more thing, whether compliances to be followed are more in case of a company or more in case of a LLP? Whether regulatory compliances which are there to be followed, whether these are more in case of a company or in case of a LLP? Yes. Yes, students. So obviously, compliances in case of an LLP are very, very less as compared to compliances in case of company. Yes, Sumit and Paranjali, you both are right. So that is the basic advantage. So it has advantage of a LLP has a advantage of a company setup. As in case of companies, the liabilities of members are limited. Similarly, in case of an LLP, liabilities of partners is limited. But it has fewer formalities as compared to company. Also, a company is governed in accordance with the provisions of Companies Act 2013, whereas relationship between partners among partners are governed in accordance with the LLP agreement. So there is a flexibility in case of an LLP, and it also provides the advantages which are available to a company, but at a lower cost and with a great room of flexibility. So that is the advantage of an LLP structure. Okay. So as you already know that small LLPs are not required to get their accounts audited, but if such LLPs also require that their accounts are audited, then these shall be audited in accordance with LLP rules. Okay. And students, there are two important documents which are required to be filed by LLP with registrar of companies. Okay. So these are form number 11, which is annual return, and form number 8, which is statement of solvency, statement of account and solvency. So form number 11, that is annual return, it is to be filed within 60 days of the close of financial year. Okay. So like this financial year ended on 31st March 24, then within the 60 days. Okay. So what does form 11 look like? So this is how students form 11, which is the annual return of LLPs, looks like. It contains details like name of LLP, LLP address, LLP number, and detail of members like individuals, how many partners are there, how many, who are the members. So these are the details. Okay. It also contains detailed about designated partners. So this is form 11. And another form which is required to be filed, that is form 8. Form 8 is statement of account and solvency. Now it is basically about the information which is required to be given in balance sheet and profit and loss. Okay. So statement of account is nothing but statement of assets and liabilities as on a particular date. Okay. So contribution and liabilities means capital, partners funds, liabilities, secured loans, unsecured loans, short-term borrowings, provisions. In asset side, we have fixed assets, net fixed assets, investments, debtors, cash. Okay. Similarly, statement of income and expenditure, turnover and all the expenditures, and profit after tax, profit before tax, provision for tax, and profit after tax. And a declaration by the LLP that by the designated partners that this LLP is able to pay its debts as they become due in the normal course of business. So this is the very meaning of solvency, that LLP is solvent. Okay, so statement of account and solvency. So this form number 8 is required to be filed within a period of 30 days from the end of 6 months of the financial year to which the statement of account and solvency relates. Okay. Yes, students. So important points of LLP are clear to you. Now, students, there are many organizations which engage themselves in not-for-profit activities, like say in charitable activities, in carrying out activities for the benefit of public at large, without having any profit motive. So such activities are usually carried out by NGOs, non-government organizations. So it is also a huge sector, NGOs. Now NGOs are these days they are working in a variety of fields, like NGOs in health sector, like NGOs in environment sector, NGOs working for the benefit of children, NGOs working for the benefit of women, NGOs working for the rights of citizens. So NGOs are there in virtually in every social sector. So students, while performing audit of NGOs, it is important to see legal structure of NGO. So how that NGO has been formed, like whether it is a trust, whether it is a society, or whether it is a Section 8 company. Okay, so if it is a trust, then obviously a provision of Trust Act, Indian Trust Act would be applicable. If it is a society, then provisions of Societies Registration Act 1860 would be applicable. Now, in case of trust, some states have also got their respective laws. Like say, Maharashtra has got its own Trust Act. So NGO students, non-government organizations, they receive funds. They receive funds from donors. So the amount of funds these NGOs are receiving, these are very huge these days. These are not limited to small thousand of lakh rupees. Many NGOs also receive funds from foreign donors, and they also foreign contributors or foreign donors, they are also influencing policy making of the government through the means of these NGOs. So by using these NGOs, foreign bodies or foreign donors, they can also affect policy formation in a country. So that is why there is a law, there is an act which goes by the name of Foreign Contribution Regulation Act 2010. So there is an act, Foreign Contribution Regulation Act 2010. Foreign Regulation Act. (2010). Now it contains various do's and don'ts for receiving foreign contributions. Now how such contribution is to received, how it is to be expended, under which heads it could be expended, what are the prohibitions. So this Foreign Contribution Regulation Act 2010, you would be reading at your CA final level. Okay, it is in your self-paced online module. You would be reading it there. So for the time being, you have to understand this much, that if an NGO receives donations, receives contributions from a foreign source, then provisions of Foreign Contribution Regulation Act, compliance to provisions of Foreign Contribution Regulation Act have also to be looked into. Okay. So when funds are received, yes, when funds are received, students, by promoters of NGO, then these may be in the form of corpus contribution. So corpus contribution is nothing but capital. Okay. And there is another term, revolving funds. So revolving funds are those funds which are loaned out by NGO to another NGO, or which are loaned out by NGO to beneficiaries of certain project. Okay. So the NGO earns interest on that loan money. So these are called revolving funds. Okay. So these are the points which you have to keep in mind while conducting audit of an NGO. So students, in all these things, one thing is common, one thread is common, like which law is applicable. So if there is a say question that which special points would you take into consideration while conducting audit of an NGO, so you can make 2-3 points, like you would check the legal structure, whether it is a trust, whether it is a society, okay, or whether it is a Section 8 company. You would also write that whether the NGO receives donations from foreign sources, from foreign entities, then compliance with provisions of Foreign Contribution Regulation Act 2010 would be looked into. Okay. And contributions received from from within the country, these have also to be verified with relevant documentary evidence. Okay. Yes, revolving funds, Sushil Kumar Barrick, I have already explained. The definition is also given in your module. Purpose of revolving fund is to rotate the amount. It is given at the page 9.29. It is given at page 9.29 of your module. The purpose of revolving fund is to rotate the amount by giving temporary loans from the fund to other NGO or to the beneficiaries for their projects and then recover the loans. So revolving fund means the NGO receives the fund, and from this fund it gives loan to other NGOs for carrying out their projects, or it gives loan to some beneficiaries which is recoverable later on. Okay. Yes. Yes. Is it clear, students? So similarly, students, we have audit in respect of an educational institution. Similarly, we have audit in respect of a hotel or club. So you can go through all these points, and you can easily correlate special audit points with respect to working of that particular organization. Like say in case of an educational institution, it would be important for you to see that uh, how fees from students are recognized. So that would be the most important point. It would be also important for you to see whether what type of grants that educational institution is receiving, whether these are grants against some capital asset or whether these are some general grants. Okay. So like some educational institution may be showing fees received in advance from students as its income, whereas it is not an income, it is a liability. It would be fees received in advance, it would be shown as receipts of the next financial year. Okay. Similarly, some educational institutions receive caution money, or you can say security deposit from the students. Like students pay, say, security deposit for library, for utilizing library services, or for other sort of things in some educational institution. So these are also liabilities. These are not income. These are also part of liabilities. So similarly, on the expenditure side, it has to be seen how the educational institution is making capital expenditure and is making revenue expenditure, and whether such expenditure is properly booked in its financial statements or not. So again, legal structure of um, financial institution can be seen, whether it has been formed as a society. So these kind of things. Similarly, say in case of fees received from students, whether any sort of fees concession has been given to students, whether any fees concession has been given to needy or poor students, then whether it has been authorized by a competent authority. These things have to be seen. Whether the concession is in accordance with the resolution passed, whether or not some excessive concession has been given. So these things have to be seen. Okay. So as you can judge, students, that all these special points mainly relate to the structure of the organization and nature of its working. So once you understand nature of working of a particular organization, then the special points which you need to take care of, these would automatically come to your mind. Yes. Yes, guys, is that clear? So educational institutions, as I have been telling you, they also receive grants and donations. So similarly, like in case of hospitals, now these days hospitals may be run by trusts, or these may be corporate hospitals, or these may be even a proprietary hospital, or these may be uh, firm which is a partnership firm which is running hospital, a firm of family members which is running a hospital. So in case of hospitals also, students, the main source of revenue is amount received from patients. So you would have to see the internal control on the revenue received from patients, how it is accounted for, what is the billing procedures. So all these things would have to be taken into account, and you would have to see whether proper distinction is made between capital and revenue expenditures, and whether accounts, whether items which need to be capitalized, these have in fact been capitalized. So these days hospitals are making a lot of capital expenditures, not only on their buildings, but also on medical equipment, which have become very, very costly. Okay. And in case of hospitals, what is the system of settling insurance claims? So if you, God forbid, if you have gone to a hospital, then you would be seeing that there is a separate section, there is a separate department within each big hospital for settling insurance claims. There is a TPA sitting there, third party administrator, which settles insurance claim in respect of different policies taken by patients or their relatives on their health, on their lives. Okay. So similarly, in case of cinemas, like these days in bigger cities, there are no standalone cinemas. There are multiplexes all around. So probably you have gone to see a movie. Okay. Yes, Sushil. Yes, you are right. So community health center is a government department. It is part of the health infrastructure of the state government. So then, in case of cinema, what is the procedure for ticketing? Now, whether ticketing is made online or it is given on the counter. So if it is online, then all the money would be received in the bank account of the company, of the multiplex company. Okay. And what is the system of receiving cash, counter sales, and so on? Such things you have to see whether the relevant taxes have been collected on the tickets. So students, there are two terms: hire purchase and lease. Now you have read about these terms in your accountancy classes, and you have also read about leases in AS 19, in accounting standard 19. Now tell me, what is the difference between hire purchase and a lease? Yes. Yes. Yes, students, what is the difference between a hire purchase transaction and a lease transaction? Yes, anyone? Yes, Unni Krishnan, Pranjali, Sumit, Shambhvi, Sushil. What is the difference between a hire purchase transaction and a lease transaction? What is difference in their nature? Yes, guys, waiting for your responses. This you have read in your accountancy classes. You have read in AS19. You have read about operating leases and finance lease. Yes, Sumit, what is your viewpoint on that? Difference between hire purchase and lease. So let us first take leases. Now, what is leasing? What is the meaning of leasing commonly? Leasing means renting. Like you enter into lease agreement. You take something on lease, on rent. Okay. So when you take something on lease, then what do you pay? You pay rent. You pay lease rent. So whether ownership remains with the lessor or lessee, if you have taken something on lease, then tell me whether ownership remains with the lessor or lessee. Yes, Unnikrishnan, right. Yes, it remains with the lessor. So lessor remains the owner. You pay the rent and you use that asset. Like in case of an operating lease. But what happens in case of finance lease? Yes, AS19. How is a finance lease different from operating lease? Tell me. Yes. Yes, Shambhavi. How is a finance lease different from operating lease? Yes, students. I presume that you have done it in your accountancy classes. Yes, Unnikrishnan, right. Finance lease for long time and return transfer to risk and return transfer to assess lessee. Yes. So finance lease is just like a loan arrangement, and the lessee pays the interest. Okay, and the value is also shown in the balance sheet. So what is the difference between operating lease and finance lease? Ownership. So ownership of the asset remains with the lessor for the entire period of lease in case of operating lease. But in case of finance lease, ownership transfer option is there. The asset may or may not be transferred, but the ownership option is there. Ownership transfer option is there. So as far as accounting treatment is concerned, operating lease is treated like a renting agreement, like similar to what you are paying on account of rent. So same treatment is there. Lease rent is booked as an expenditure. So finance lease is treated like a loan arrangement. Hence, the ownership is considered that of lessee and appears on the balance sheet of the lessee. Since ownership is considered that of lessee, so therefore it is eventual that lease term is generally more than or equal to the estimated useful life, estimated economic useful life of the lease arrangement, of the asset. Okay. Whereas in case of operating lease, it is not so. In case of operating lease, a lease term is generally extends to less than of 75% of projected useful life of the leased asset. So in case of operating lease, lessee pays only the monthly lease payments, and that is booked as an expenditure. Whereas in case of finance lease, lessee bears uh, taxes and insurance expenditure, and lessee can also bear can also claim interest and depreciation in case of finance lease, as ownership is to be transferred and it is reflected in the balance sheet of the lessee. Okay. Whereas in case of operating lease, no depreciation can be claimed, only rent would be claimed as an expenditure. Okay. So this you have already read in your AS19 students, these things. So these are being repeated here. And what is an hire purchase agreement? So in hire purchase agreement, the hirer gets possession of goods and he agrees to pay the installments of goods which have been possessed by him. So in hire purchase agreement, possession of goods is delivered by the owner to hirer, to the person who has taken the goods on hire purchase. Okay. And the property in the goods is to pass on such person on the payment of last of such installments. So when that person would pay last of the installment, so the property in the goods would pass on to that person, and such person has a right to terminate the agreement at any time before the property so passes. So the owner is the person who owns the goods, and hirer is the person who has obtained possession of goods and he has agreed to pay the installments, and the property in the goods would pass to him on the payment of last installment. Okay. So obviously, if some company is engaged in such kind of activities, say hire purchase agreement, hire purchase activities or leasing activities, then obviously you would be seeing the relevant agreements. Say like you would be seeing hire purchase agreement, which are the parties involved, what are the number of installments, what is the cash price, what is the down payment, okay, what is the date of the commencement of agreement. So all these things would be looked into by the auditor. Similar uh, is case with companies entering into lease arrangements. Now, nature of lease would have to be seen, and distinctive points of operating lease and finance lease we have already covered. So students, at this stage, we'll take a small break of 10 minutes and we'll come back after 10 minutes. So yes, Nisar, break for 10 minutes. Hello. Nisad, break for 10 minutes. Yes, welcome back, guys. So, students, now there is audit of cooperative societies. Now, students, what is a cooperative society? What do you understand by cooperative society? What is the general meaning of cooperative society? So, students, these cooperative societies are such an important form of organization that you would be surprised to know that there is a separate ministry of cooperation in this regard. Yes, have you heard about Ministry of Cooperation? There is a separate union government ministry, Ministry of Cooperation. So you can very much understand that how important this area of cooperatives is. Yes. Yes, have you heard about this ministry, Ministry of Cooperation? Yes. Anyone, guys? There is a union ministry, Ministry of Cooperation. So the activities of this ministry include making procedures for easing out activities of cooperatives for cooperative societies, and for encouraging multi-state cooperatives. So cooperative students, cooperative societies can be formed by persons to meet some common objectives. Now these objectives can be economic, social, or cultural. So like there may be a cooperative society formed uh, for some dairy, or for poultry activities. There may be cooperative society for marketing activities. There may be cooperative society, say, for housing activities. There may be cooperative society for say multi-purpose activities. So cooperatives can exist for a variety of reasons. So uh, you must have seen cooperative housing societies in your cities. Yes, haven't you guys? So there are many large cooperative societies in our country also, uh, like IFCO, Indian Farmers Fertilizers Cooperative, like CRIPCO, Krishik Bharti Cooperatives. So there are many large national cooperatives. These I am telling you. So cooperatives are very popular in states of Maharashtra and Gujarat. There are huge, large cooperatives like Amul movement. You have seen Amul butter. Yes. So it is also a cooperative of Gujarat farmers, dairy cooperative. Yes, cooperative banks are of a different category. These come in banking sector. Yes. So students, cooperatives for cooperatives, there is a central act which goes by the name of Cooperative Societies Act 1912. Okay. Besides, many states have passed their own laws in relation to cooperatives which are operating in their states for their registration, for regulation of their affairs. So there is a Central Act, Cooperative Societies Act 1912. Besides students, there is a word, there is a term, multi-state cooperative societies. Multi-state cooperative societies. Now, for such societies also, there is a separate act, which is Multi-State Cooperative Societies Act 2002. So what is a multi-cooperative society? What is a multi-state cooperative society? Yes, it is clear from name. Yes, students. What is a multi-state cooperative society? Yes, yes, guys. Anyone who can tell what is a multi-state cooperative society? Yes, anyone? Yes, Shambhavi operating in different states. Sushil, you are saying Hudco is a cooperative society? No, I don't think. Housing and Urban Development Corporation, it is not a cooperative society. Yes, interstate operations, Unnikrishnan, you are right. Sumit, operating in more than one state. So as the name suggests, multi-state cooperative societies operate in more than one state. Their operations are not confined to a particular state. These span over a number of states, and their members are also spread um, over number of states. Okay. Yes. So, students, tell me, do you know about cooperative principles? Now we are speaking about cooperatives. What are cooperative principles? Now, cooperative societies work on the basis of cooperative principles. Yes. Do you have any idea of cooperative principles? What are cooperative principles? So I'm telling you, it would become easy for you to understand. Yes, guys. So cooperative principles like the membership of society of a cooperative society is is open and voluntary. Cooperative societies work on democratic principles. They choose their members, and those they choose their representatives, elected representatives, and those elected representatives are accountable, are responsible to the members. Okay. And a person has a vote. Cooperative societies work on the principle of a person, one person, one vote, and they have a system. They work on the principle that control of over capital is also democratized, and their liability is also limited to the extent of share in the cooperative, like a body corporate. So these are all students main features, or you can say principles of a cooperative. So in case of a multi-state cooperative society, the auditor is appointed at the AGM till the conclusion of and he works till the conclusion of next AGM, and he is more or less similar qualifications and disqualifications as are there in case of a company auditor. Like, he cannot be employee of the cooperative, he cannot be officer of the cooperative, he cannot be a body corporate, he cannot be indebted to the cooperative for a certain amount. Okay, so these things are contained in Multi-State Cooperative Societies Act 2002. Besides this, Multi-State Cooperative Societies Act 2002 also contains provisions relating to special audit, relating to inquiry, relating to inspection by the central registrar. So there is a in the scheme of things, in the Multi-State Cooperative Societies Act 2002, there is a authority, there is a position known as central registrar. So in certain circumstances, the central government can order special audit of a multi-state cooperative society. Now, what are those circumstances? Now, what are those circumstances? Now, let us see. Which are the circumstances where special audit can be conducted by central government? Now, under section 77 of the Multi-State Cooperative Societies Act 2002, where the central government is of the opinion that the affairs of MSCS, so in short, I would call Multi-State Cooperative Society as MSCS, where the affairs of MSCS are not being managed in accordance with the cooperative principle, in accordance with the principles of self-help, or in accordance with the prudent commercial practices and sound business principles. So central government can order special audit of cooperative society, or the MSCS is being managed in a manner which can cause injury or damage to the interests of trade or industry to which this society pertains. So if the society is carrying certain activity pertaining to some trade or business, then the and if the activities of such MSCs are being carried in a manner which can cause injury or damage to the interests of trade, industry, or business, then central government is empowered to direct special audit. And the financial position or the financial position of any MSCS is such that it would endanger its insolvency, that it would not be able to pay its debts. Okay, so solvency, we had just seen form of solvency in case of LLPs. So you very well understand, students, the meaning of word solvency. So if I am able to pay my debts, I am solvent. If I am not able to pay my debts, then that person gets insolvent. So central government can provide for special audit, and that special audit can be conducted by a chartered accountant or by auditor of multi-state cooperative society, MSCS, and report has to be submitted to the central government. So all these provisions are relating to special audit are contained in section 77 of MSCS Act 2002. Okay. And powers and duties of statutory auditors are, as I have already told you, these are similar to what we have studied in case of a company auditor, more or less similar. Okay, on the same lines. And in respect of reporting requirements also, the requirements are similar to a company auditor, like a company auditor has to make inquiry of certain matters under section 143 subsection 1 of the Companies Act. So similarly, under multi-state cooperative societies act, the auditor has to make inquiry of the similar matters. Okay. And the contents of auditor's report in case of multi-state cooperative society are also given in section 73 of the Companies Act. So it is also stated, like in case of a company, whether the balance sheet reflects the state of affairs of the society's affairs as at the year end, in case of P&L of the profit or loss, whether he has obtained all the informations, whether proper books of accounts have been kept, whether the report on the branch offices have been forwarded by the by persons other than the multi-state cooperatives auditors, and how he has dealt with them in the auditor's report. So these are the similar requirements, like it were there in case of branch audit, in case of company audit. We have read all these things in our chapter on audit report, chapter number 8. So you need not remember these things fresh all again. Just replace the word company with multi-state cooperative society, and mark the points which are common in case of a company and in case of MSCS. Okay. Yes, Unni Krishnan, you are asking, can we say private cooperative societies run by private parties and public cooperative societies run by, there is no, for understanding you can understand so, but as such there is no distinction in law. Okay. And Pranjali, you are asking, can you explain narrative audit report as per convention in cooperative society? Now, where you have seen this word narrative audit report? Please tell me page number. Yes, Paranjali. Narrative audit report, at which page it is there? Narrative means where it is described what is to be stated in the report. What are the contents of the report? Even though you can tell me where it is written, Paranjali. So similarly, students, there are provisions regarding the regarding inquiry and inspection of a. Yes, in module at which page? Tell me page number. Write the page number. So inquiry by central registrar under section 78. So there are provisions in which circumstances and how central registrar can carry out an inquiry into the constitution, into the working of a cooperative society. Okay. So the central registrar may, on request from a federal cooperative to which a multi-cooperative society is affiliated. Say, what is a federal cooperative? When certain multi-state cooperative societies join to form a federation, so it becomes a federal cooperative. So the members of federation are multi-state cooperative societies itself. Okay. So if there is a request from federal cooperative, okay, or a creditor, or not less than 1/3 of its members of the board, or not less than 1/5 of the total number of members of a MSCS, then the central registrar can hold inquiry or direct some person authorized by him to hold an inquiry into the constitution, working and financial condition of MSCS. So three things are important: into the constitution, how it is constituted, into the working. So remember these three keywords, and number three is financial condition. So these provisions regarding inquiry by central registrar in the affairs of MSCS are given in section 78. So similarly, on similar lines, there are provisions regarding inspection of MSCS under section 79. Okay. So the central registrar has power to inspect, to make an inspection of a MSCS on request on the similar lines, as was in case of inquiry, Okay. If the request is received from a federal cooperative or a creditor, or by not less than 1/3 of members of the board, or by not less than 1/5 of the total number of members of MSCS. So these requirements are similar to those in case of inquiry. Here also the board members threshold was not less than 1/3. Similar is there in case of inspection. So by not less than 1/5 of total member was there in case of inquiry. It is also the same in case of inspection. Creditor is also common. It was same in inquiry. It is same in inspection. Okay. So the provisions are similar in nature. Okay. So multi-state cooperative society students, they have also to maintain books of accounts which are prescribed in the multi-state cooperative society rules, which go by the name of MSCS rules 2002. So the act was passed in 2002. Now the rules were framed, and these have been together with their amendments. These books of accounts have to be maintained by MSCS. So what are these books of accounts and records? So records of all sums of money received and expended, and matters in respect of which the receipt and expenditure takes place. Okay. So all the monies which have been received by the society and all the amounts which have been expended. So you have to maintain records in respect of in and outs. Okay. All sale and purchase of goods. So all the profit and loss items, all the assets and liabilities. Okay. And in case of MSCS engaged in production, processing and manufacturing, particulars relating to utilization of material or labor. So if MSCS is engaged in some production activity, then records relating to cost, items of cost, utilization of material have to be maintained. Okay, so these requirements are prescribed in MSCS rules 2002. So these are some of the important points, students, in MSCS Act 2002. Remember the significance of MSCS. Remember what does MSCS mean. Remember which books of accounts are required to be maintained by MSCS. Remember provisions regarding appointment of auditor, regarding powers and duties of auditor. Remember provisions regarding special audit, regarding inquiry, regarding inspection under MSCS Act 2002. Okay. Now we can do some questions, students. See, test your understanding 4. Yes. Yes, please read the question and then try to answer without seeing the solution given in your module. Yes, anyone? So a society has been formed by pan-India employees of a public sector bank. So the employees of public sector bank, a nationalized bank which is owned by government, a society has been formed by their employees. So the purpose of society is to promote saving habits of members and to grant loans to them. So they save some money, and from this money the loans are lent to the members themselves, to the deserving members. So identify type of the society and discuss nature of books of accounts to be maintained by such society. Yes, Shambi, you are right. Multi-state cooperative society and books of accounts we have already studied just now, like uh, account of the money received and money spent, purchases and sales, assets and liabilities. Okay. Yes, Pranjali, you are saying narrative is given at page number 9.73. Okay, let me check. Pranjali, 9.73. This page is itself open. Here it is written. There is no word narrative. There is no word narrative. Paranjali, either you are writing the word wrongly. The page is open before me. Page 9.73. You are saying PowerPoint given. No, but at page 9.73, there are no powers given. Okay. So these are powers given. So it means that central registrar or the person authorized by him, he shall have at reasonable times free access to the books, accounts, records, and properties of MSCS. And he may summon any person. Narrative word is not used anywhere in this page. Where narrative report is used. I have searched also, and in this whole chapter, the word narrative is not there. There is no match. There is no word narrative. So this only describes powers of the central registrar regarding inquiry. So like he has power to inquire from any person. He has power and right of free access to books of accounts, documents, securities, cash, properties belonging to the MSCS, and he can summon any person who is in possession or custody of such books, accounts, or records or documents. Okay. Yes, see this question. You are auditor of a school operating in your city. During audit of a year, it is noticed that fees concession to students have been provided in substantial number of cases. So discuss how you would proceed to verify the same. Yes, very simple, just common sense. So you are auditor of a school, you find that school has given fees concession to students. Now what is your responsibility in this regard? Which points you would verify? Yes, anyone? Yes, Ruhani, you are right. Rules regarding grant of concession. Yes, that's the basic thing. Why this concession was granted? Who granted this concession? Whether that authority who granted the concession, whether that was the proper and authorized competent person, and whether the concession has been granted in line with the sanction to the deserving student. No, no, these things are there to be seen, but you have to write first of all that 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 fees concession is properly authorized or not, because otherwise there would be misstatements in the fees. Okay, like there might be some fraud in fees collection. It is quite possible. Yes, Unni Krishnan, there is a right to education um, under fundamental rights for children up to certain age. I think up to 14 years, if I am not wrong. Yes, Shambi, internal control is correct. There is right to education definitely under fundamental rights. It is prescribed in constitution up to a threshold age. Okay. Yes, see this question. Yes, CA Akash is the auditor of a partnership firm consisting of 4 partners. During the year, one of the partners has retired and another partner has uh, joined the firm. Discuss any one point which shall be considered by you to ensure financial statements of firm are not misstated due to change in constitution of firms. So what you would verify when there is change in constitution? What you would verify? One partner has joined, another has gone. Yes, yes, guys, anyone? Very simple. Yes, partnership deed verification. So, but basically, what on seeing partnership deed, which point you will verify? There is a change in constitution. So, change in constitution always takes place on a particular day. Say on day 1, Mr. X has retired. On day 2, Mr. X has joined in. So it is his duty to see that profits are divided appropriately in accordance with the terms of change in constitution as evidenced by partnership deed. Okay. Now see this question. Test your understanding one. Yes, very simple, students. We had considered this point at the very beginning of our lecture today. So you have to state what is meant by Consolidated Fund of India and what is its importance. Consolidated Fund of India, it is described in your module. Now, what is its importance? Yes, yes, students, what is its importance? Anyone? Yes, Shambhu, it is right. Revenue from direct tax, indirect tax, and non-tax revenues, and loans received, recovery from loans. These all form Consolidated Fund of India. Consolidated Fund of India is divided into revenue account and capital account. So there may be receipts on revenue account, there may be receipts on capital account. Okay. It is not only tax revenues, but non-tax revenues like certain fees, etc., which are collected by the government. These also form part of Consolidated Fund of India. So everything basically which the government receives, except certain items which form part of public account of India and contingency fund of India, these go into Consolidated Fund of India. Okay. And what is the importance of Consolidated Fund of India? Yes. Yes, anyone, what is the significance of Consolidated Fund of India? Yes, Sumit, Krishnan, what is its significance? What is its importance? None. So the expenditure is made, all the government expenditure is being made out of the Consolidated Fund of India. So that is why it is important in simple terms. यस, निसर्ग आप अनम्यूट कर सकते हैं. हेलो. Yes, students, if you want to ask something on Zoom, you can ask in English or in Hindi. If any student wants to ask something, yes, any student, if he wants to ask if he or she wants to ask anything on the Zoom in English or in Hindi, So I think there is none today. There is no query to be asked on Zoom. So निसर्ग आप म्यूट कर दीजिए दोबारा. Okay. So students, now we have got an overview of this chapter. Now, how you have to proceed while preparing for your exams for this chapter. So students, if you cram the points, you would end up splitting up your hairs. So the best approach to do this chapter is you understand some technical terms, you understand the nature of the entity, the nature of the organization, what is its purpose, what is its working, and you remember few points, few audit procedures, because in your exam, in your paper, only 4 mark and 3 mark questions are being asked. Okay, so obviously you are going to write not more than 4 or 5 lines or maximum 8-10 lines, maximum a page. Okay, so therefore the questions which would be asked to you in this chapter in your exam would be on a particular area, would be on a particular sub area, like we had considered propriety audit. So what is included in propriety audit? So there are 3-4 points which you have to remember, like these are 3-4 points. So when you would be doing the chapter, such things would become clear to you, like this. These points states the expenditure should not be prima facie more than what the occasion demands. So जितनी जरूरत है उतना ही एक्सपेंडिचर आपको करना है. सो वेरी सिंपल, इट इज द बेसिक कैनन ऑफ फाइनेंशियल एडमिनिस्ट्रेशन. So the expenditure should not be prima facie more than what the occasion demands. No authority should exercise its powers of sanctioning expenditure to an order which will be directly or indirectly to an advantage, to its own advantage. So authority making an order of expenditure cannot pass such an order which would ultimately benefit him. Okay. Public monies should not be utilized for the benefit of a particular person or a section of the community. So it should be used for the society at large, unless there are 3-4 conditions. Exceptions are there. Unless the amount is very insignificant, it is very small, then it can be used for a particular person or a section of the community. Or say the expenditure is in pursuance to a recognized policy or custom. So it is customary in that part to incur that expenditure. Okay. Or the allowances such as traveling allowances granted to meet expenditure are not source of profit to the recipient. So the authority should not grant such allowances which result in profit to the recipient. Allowances are always to meet the cost which is incurred by the recipient. So by virtue of an allowance, the recipient cannot earn profits. Okay. So like such important points you have to remember. You have to exactly remember what do we mean by propriety audit, what do we mean by performance audit, what is the meaning of audit of sanctions, audit against rules and orders, audit against provision of funds. What do we mean by Consolidated Fund of India? What are the provisions relating to the appointment of Comptroller and Auditor General of India? What does CAG do? What are his duties? Okay. So these kind of things. Similarly, in case of different type of entities, we have to understand the important audit procedures, and wherever reference is given to some act, wherever reference is given to some law, then some important points which are given in your module, these have to be remembered. Okay. So this is over for today, students. Thank you so much. Thank you for giving a patient listening. We will meet again on 25th. Okay. Thanks a lot, students. Thank you.